Hello everyone, welcome to the Crypto Intel channel. Today we'll be conducting a technical analysis of the KASPA coin and discussing the best entry points for today. Before we start the video, I'd like to ask you to subscribe to the channel, like this video, and click the bell icon so you can always stay up to date on what's happening in the market. It takes you literally a second, but for me it's motivation to improve the quality and level of the videos on the channel. We have a lot to discuss, so let's get started right away. The KASPA market is currently in a phase where the key factor is not simply price, but the dynamics of pressure on the resistance level. The price is holding in the 0.036 to 0.038 range, and this is no longer a classic sideways trend, but a structure in which the market is gradually moving upward. The main change is that the price has virtually stopped returning to the lower boundary of the range. Previously, movements were more even, but now the market is consolidating closer to the resistance level. This means that participants are willing to buy at higher prices, and liquidity is gradually flowing upward. Technically, a sequence of higher lows is forming. Each pullback is becoming weaker, and the return to the upper boundary is faster. This is creating persistent pressure on the 0.038 level, which is currently serving as a key resistance zone. The key levels remain as follows. Support is at 0.036, then 0.034 and 0.032. Resistance is located at 0.038 and 0.040. Moreover, the 0.038 level has already been tested several times, and each time, sellers' reaction becomes weaker. Now it's important to understand what's happening with liquidity. A large number of short stop orders are concentrated above 0.038 to 0.040. This means that if this zone is broken, the market could receive additional acceleration due to liquidations. Below 0.036, long positions remain liquid, which can be used in the event of a pullback. However, the key point is that the market isn't experiencing deep pullbacks. This suggests that sellers are gradually losing control, while buyers are maintaining the initiative. The price action confirms this. Pullbacks are becoming less aggressive, candlesticks are closing closer to their highs, and sellers' attempts to extend a downward move are quickly bought out. This indicates a gradual exhaustion of supply. It's important to note, however, that there's no strong upward momentum yet. This means the market is still in the accumulation phase, not the trending phase. There is pressure, but it's being realized gradually. Now, the key element is timing. The longer the price holds below resistance, the higher the likelihood of a breakout. The level begins to weaken, and each new attempt makes it less stable. Considering the scenarios, a consolidation above 0.038 opens the way to a test of 0.040. A breakout of 0.040 could lead to an acceleration of the movement toward 0.045 and then to 0.050. Such a movement is usually accompanied by an increase in volumes and liquidation of short positions. If the price fails to consolidate above 0.038 and returns below 0.036, this will be a sign of weakness. In this case, a return to 0.034 and then to 0.032 is possible. If pressure intensifies, the price may test deeper levels. The possibility of false breakouts should be taken into account. Before a real move, the market often makes a sharp move in the opposite direction to gather liquidity. This can look like an upward breakout followed by a reversal or a short-term downward sell-off before a rally. Therefore, the key signal remains unchanged: consolidation after a breakout. Without this, any movement remains within the range. On lower timeframes, a local ascending structure is forming. It confirms buying pressure but remains vulnerable due to a lack of volume. Volatility remains low, but this is not a sign of weakness. This is the stage before expansion. Such phases often end with a sharp impulse when accumulated liquidity begins to take effect. As a result, KASPA is in a phase where pressure on resistance is becoming increasingly pronounced. The structure is gradually shifting upward, and liquidity is concentrating in the breakout zone. This isn't a random movement, but rather preparation for an impulse. The key range remains 0.036 to 0.040. As long as the price remains within it, the market remains in a holding pattern. But with each new test, the probability of a breakout increases, and the coming movements will show whether the current pressure will mark the beginning of a strong upward impulse or whether the market will continue to accumulate before the next stage. A closer look at the current structure reveals that the market is not simply creating pressure on the level, but rather a localized overheating zone beneath resistance. This condition occurs when the price remains at the upper end of the range for a long time without a full-fledged pullback. Under these conditions, any new attempt by sellers to halt the rise requires increasing effort. Particular attention should now be paid to the price reaction near 0.038. Each new test is accompanied by a smaller downward rebound. This means that sellers are not only losing the initiative, but are also beginning to defend the level less effectively. In classical technical analysis, this is considered one of the signs of an imminent breakout. Now it's important to look at the distribution of liquidity within the range. The 0.036 to 0.037 zone is where the main accumulation of positions is taking place. This is a kind of base from which the market attempts to break through resistance. The more often the price returns to this zone and quickly moves back up, the more strongly the presence of demand is confirmed. At the same time, the structure remains compressed. The range of movement is gradually decreasing, indicating an accumulation of energy. This dynamic often leads to a sharp exit as the movement accelerates faster than usual when liquidity is activated. In terms of participant behavior, the market is currently in a holding pattern. Most traders see the level and understand its significance. This creates an effect of order concentration, with a significant number of positions concentrated in one area. This is why a breakout, if it occurs, could be sharp. With stop orders activated and momentum players joining in, the price can quickly move through several levels without significant pauses. However, it's important to consider an alternative scenario. If the market fails to break through the level and begins to lose ground above 0.036, this could lead to a deeper correction. In this case, a return to the 0.034 to 0.035 zone with a retest of support is possible. A false breakout scenario also cannot be ruled out. The market could briefly break above 0.038, gather liquidity, and then retreat. This is typical behavior before a more sustainable move forms. The key factor remains the reaction after the breakout. If the price consolidates above the level and forms a continuation, this will signal the beginning of a momentum wave. A quick return, however, will indicate continued accumulation. Thus, KASPA is at a point where pressure reaches its maximum, the structure becomes increasingly directional, and liquidity is concentrated near the key level. This creates the conditions for a strong move, but its direction will only be determined by the market's reaction at the moment of exiting the range. And friends, don't forget to leave your thoughts on the KASPA coin in the comments below this video, what your plans, hopes, and expectations are for it. The best and most engaging comment will be featured in the next video. Just a reminder, friends, informational and news videos are posted on the channel every day, so you won't get bored here. And of course, don't forget to subscribe to the channel and click the bell icon so you're always up to date on all the latest news. And if you liked this video, please support me with a like. Your like is my motivation. Thanks to everyone for watching, and see you next time.